and we are covering in this episode what is Biden's 1031 proposal. The answer is eliminating the need for the 1031 exchange and making it more difficult for investment real estate owners to buy and sell real estate. And so let's dive into some of the proposed tax plan of President-elect Joe Biden. His first part of his plan would eliminate the 1031 exchange for investors who have ordinary income of $400,000 or more. A couple things we're not clear on would be, well, does that include the asset that you're selling currently, right? So if that asset was, let's say, $250,000 and you already earned $200,000, those combined would be $450,000. So is he saying that it would be that combined? We're not quite sure yet. But if that were the case, that would eliminate virtually most, if not all, 1031 exchanges for commercial real estate owners, which would be really difficult for people to want to sell real estate should that happen, who have large capital gains tax. Also, partnerships like S Corps and C Corps that hold investment real estate would be prohibited from 1031 exchanges tax treatment under Biden's proposed tax plan, as the current IRS regulations require that the deed title holder is the only entity which can participate in 1031 exchange, which essentially means the whole entity must move in the traditional 1031 exchanges, right? There's no drop and swaps, and there's no, putting it into like something else. That's kind of been looked at and frowned upon for a while now, and a lot of exchanges have been called on that, and the taxpayer had to pay the tax. So you want to be very, very cautious with that already. But in addition, it looks like he's going to put even maybe potentially stricter provisions on that. As well, long-term capital gains tax would be increased to 39.6%, virtually doubling the current 20% rate. So as it stands right now, long-term capital gains tax, federal, is 20%, right? And then, of course, you have state, and then you have Medicare tax, and all of those added up typically are about 37%. It'd be state, federal, and Medicare tax. Whereas right now, he's proposing to basically double the federal to about 40%, which would effectively put everything above 50%, which is again would be very, very challenging for someone to want to sell real estate. So if you look at that, if that's not scary enough to consider, here's another thing that's kind of interesting to look at, is the elimination of the stepped up basis. So one of the biggest things on real estate for a long time was the ability to what's called basically drop and swap, and you could swap until you drop and drop until you swap, and when you drop, your kids could step into your shoes and actually step into a stepped up basis on that asset, meaning the asset, let's say if it was worth $1 million today, but when you bought it, it was $100,000. Well, if you passed away and you still owned it, your kids would inherit it at a stepped up basis of $1 million. Therefore, they could walk away capital gains tax free. But he's proposing potentially to take that away, and that would be also very challenging for real estate owners. So a lot of things to consider, and it's best to plan. Here at Capital Gains Tax Solutions, we want to help you map out a exit plan, not having to use a 1031 exchange, using something called a Deferred Sales Trust. You can actually go to capitalgainstaxsolutions.com to learn more about that. And what's nice about the Deferred Sales Trust is also a backup plan for a failed 1031. So if you're in a 1031 now, we just actually did a deal recently. We saved Georgia a $7.6 million multifamily property. We saved his failed 1031 exchange, and he's been able to diversify and to be on the sidelines and kind of wait for property values to drop. That's a nice part of the Deferred Sales Trust, all tax deferred. Again, you can go to capitalgainstaxsolutions.com to learn more about the Deferred Sales Trust and how it might be able to help you save a failed 1031 exchange, or go to experttaxsecrets.com if you are a business professional, realtor, commercial real estate syndicator, financial advisor, to learn more about the Deferred Sales Trust. Hey, appreciate you watching this video. And here's the key: have a plan, prepare, and get everything in order for your next 1031 exchange, or have an alternative like the Deferred Sales Trust. Thanks.